This week on Make Better Wealth Decisions, we speak with industry veteran Warren Collier, and we're going to be talking about the sorts of ways we need to think about decision making, our unconscious biases, the way we can think about things in a more purposeful manner, and how the industry is changing and evolving to take all these things into consideration. Stick around. This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. We're speaking this week with Warren Collier. Warren has an over 30-year background in financial services. He's been a lawyer, a COO, a business head. He's led teams in Canada, the US, Asia, Latin America, and Spain. He's experienced a variety of cultural and social paradigms and decision-making, and has recently been focused on integrating these different paradigms into a more effective model for making decisions. So I thought he'd be a perfect guest for a podcast called Make Better Wealth Decisions. Warren, how are you today?
I'm fantastic, John. Thanks so much for having me. How are you?
I'm great as well. I'm looking forward to this conversation. I've been looking forward to it for some time since we set it up a while ago. So this is going to be really exciting for me. I'd like to begin by asking you a little bit more about your experiences and what you can tell us, given your vast experience in the industry, in the wealth management industry, about self-awareness and unconscious patterns and the sorts of things that get in the way of making better decisions. What can you tell us about what you've experienced and what you've learned and maybe what we should be looking out for?
Absolutely. And first of all, I want to commend you. I think this whole series is incredibly important to people. I spent pretty much the first 35, 40 years of my life making decisions, building my career, having my family, and never stepping back and actually thinking about how I was making those decisions. And I think particularly when it comes to investing, it's really key that people are thinking about how they're making decisions, not just thinking about what those decisions are. I'd say the single key takeaway, John, is awareness. We have that human beings on average make roughly 35,000 decisions a day. And 90 to 95% of those are subconscious. We're constantly deciding things and we're not even aware of them. And then the key, I think, is that those remaining decisions we make are massively influenced by subconscious patterns and behaviors. And there's been a real growth I've seen, I think, in our acknowledgement that we have behavioral biases. And I've been fortunate enough to taking the time I have to dig into sort of the neurobiology behind that, understand how that happens much better than I did before. I really think that if we could spend a few minutes just chatting about that, like how do these things.
Cole's notes. Yeah. What exactly would you say the neurobiology teaches us?
Sure. So simply, I think we're conceived and our brains are the collection of nerves that make up our brains and our nervous system start growing so quickly, informed at the outset, initially just by our DNA, our genes. And I think in the first 4 weeks after we're conceived, our brains are growing something like 8,000 neural connections a second. Like it's incredible how the human brain operates. And I think by the time we're 35, roughly 95% of our brain is hardwired based on that sort of genetics that were passed down and then our experiences. So both nature and nurture. By the time we're 35, we have formed patterns, ways of thinking, just core beliefs that we don't even stop and think about anymore. And that's an amazing gift. Our brain is what's allowed you and I to sit here in different offices and different homes and talk to each other like this. But I think that it's essential. What I've learned and what has informed sort of my thinking around what to do next with my life is just an awareness. We can stop and recognize what our own biases, patterns, and behaviors are. And I think that's so aligned with the work you've been doing. When I was listening to one of your sessions just a couple of days ago around optimism bias. And I do want to just commend you. I think you were saying we had 2 years of incredibly strong bull markets. Nobody did any tax loss harvesting last year. And you're saying maybe coming into this year, it's a time for people to set that optimism aside a bit and step back from the markets a little. And we've seen what's happened over the last little while. I think, again, commend you on the timeliness of that advice.
All right, so maybe I should ask you for some advice then. Thank you for the kind words. I appreciate that. I'm wondering, I always think that I could and should be doing more. What specifically could a person like me who gives advice to retail clients do to motivate people to actually do what you're talking about, which is being self aware, stopping, reflecting, and making more conscious decisions as opposed to simply doing what everyone in the office is doing or doing what everyone in their beer league is doing?
That's like the ultimate question, right? And I believe that the most important way you can help people see the value of that is just to live it yourself, right? To demonstrate when you're with them that you're listening, to be aware of your own biases. I know that I have historically had a tendency to need to be controlling and defensive. And one of the things I try to do now is just acknowledge that in my engagement with people up front, own my own biases, let people know what they are, and then try and demonstrate in my engagement with them that, like, okay, I can see I'm doing that. I'm going to step back. And I've seen that be pretty impactful. I think, second, just talking about it. Like, you don't need to get someone to totally change the way they think about life in one meeting with them by doing what I just did to kick this off, right? Like, go deep on neurobiology. That's going to put people off. It's going to trigger some of our own sort of behaviors and things. But I think what you're doing from your platform, talking about decision making, and when you're with your clients, actually having a conversation with them about reflect back on like the key decisions you've made in your life. Why do you think you made those? What were your drivers? And again, just demonstrating the awareness that we all have these biases is the most effective way, I think, of making people comfortable with potentially stopping and thinking about their own.
Okay. So self-awareness is a really touchy subject because Daniel Kahneman has said that everyone is biased, including Kahneman himself. So every single person on the planet is biased. But if you ask people if they're biased, they will basically say, no, I'm not, or not very much. And that to me is an example of the lack of self-awareness that exists, which is part and parcel with just being human. So a moment ago, you talked about being transparent. So how can people be more transparent about thinking about what their motives are, more reflective about motives? And how can people giving advice, once again, be transparent and saying, here are my biases. Let me confess my biases up front. Maybe if I go first, maybe then you can confess yours. And what can we do to have a more purposeful dialogue about uncovering what those biases might be?
So first of all, I think like language is so powerful, right? And the word bias has a really strong pejorative connotation in our environment, right? And so I try to use terms like behavioral patterns, subconscious behaviors, things like that. I think the reason we're successful as a species and as individuals is the overall powerful impact of our biases, right? Our biases are just patterns that we've developed those patterns to survive, to thrive. They come from very positive places and positioning it that way and then just saying, listen, the challenge is that those same patterns and behaviors get in our way sometimes. They're not inherently bad. They're amazing things. Our brain is this incredible tool that has let us do so many things, but it's constantly telling us that the way we've learned to do things is the right way to do them. And that's not always the case. It's often the case, but it's not always the case. And in this moment, when you're thinking about coming into 2025 and your portfolio allocation and your long-term investment goals, let's just step back from those and see if we can think about like, are there things I would be doing right now that may not be appropriate in this moment at this time? Again, try and not position, again, the word bias, I think it's, it carries a tone that sets people off and nobody wants to be biased, but it's easier to acknowledge that you have patterns and behaviors.
So maybe if I asked you the same question, only with a bit of a different focus, instead of
Mhm.
talking about bias, which has a pejorative overtone, let's talk about what people who are doing what I do, giving advice. What advice would you give to people about how they talk about giving advice and the importance of real advice and how they can go about doing it in a way that is honorable, but also purposeful, that actually has a positive impact?
I think that's the core of this, right, John? That for your clients, like for you and for all of us, ensuring that we get valuable insights is core to our decision making. So if I was a client of yours, I would be talking to you for one of any number of reasons, right? Either I had heard a podcast, I'd read you, someone had recommended you to me. But I'd be going in without a real sense, probably, of who you are, of what I need, of what you can provide. I again would say that starting with an awareness of your own biases. Are you coming into this meeting with me with a sense of what this 60-year-old financial services professional needs? Or are you coming in open to just learning more about me and paying attention and then maybe asking me some questions around, that was a really interesting decision you made to move from this career to that career. What motivated that? And start to learn what those drivers are. I'm probably not aware of them. I'm making the decisions I make. And if you can, as an advisor to me, be aware that he's really predisposed to either optimism or fear, knowing that it's some component of both, but there's like a small set of biases we all have. And as an advisor, if you're aware of what those are and can first recognize your own, but then recognize them in your clients, I think you can talk about those in a way that doesn't make me defensive, but makes me want to talk to you more about it. And so I think starting with an awareness of these biases and then trying to pay attention, draw out what your client's own biases may be, and then try to make them comfortable that they can be aware of that bias. It doesn't mean that their experiences are invalid or wrong. It just means they are what they are. And if we can just be aware of it, but then focus on the goal, I
Just be
think
aware. Yeah, just be aware of your predisposition. The predisposition may be right, wrong, or in some circumstances and wrong in others. But if you're aware of it, you can at least make the decision with your eyes open and take it from there. So that brings me to, I was at a conference just last week and I was thinking of you. It was a conference for alternative investment products and vehicles. And one of the sessions had four people, two yay, two nay, with regard to the value of active management versus passive management. And ironically, three of the four people were former heads of exchange traded fund companies. Now, you're a former senior executive at a major ETF producer as well. And one of the things that was not lost on the audience is that pretty much all companies that manufacture exchange traded funds have both active and passive products on the shelf. And so it's not as though the people that are being asked to debate the topic to begin with are themselves lily white with regard to whatever position they take, because they have all, three of the four at least, taken both sides of the argument or offered both sides of the argument to their clientele, because they don't want to get involved in the, what I sometimes call the religious debate between active and passive. But it's important that we have honest discussions about what our biases might be. So I'm wondering if you could offer some thoughts on the biases that are inherent in some of the discussions that are part and parcel with the financial services industry, most notably the active versus passive debate.
And I think this is where you and I professionally engaged in person last time. It was probably like 7, 8 years ago. There was it. And I think that conversation was more around advisor compensation models and things like that, but it was related to this question. And what I would say is that there are index slash passive products, and there are traditionally actively managed sort of stock picker kind of products. And there are systematic, quantitative kind of model products. But no investment decision isn't active. Every time we make a decision, we're taking an action. And when it comes to the debate between index and active products, what I'd say is the conversation should be around what is it that you as an investor or you as an advisor working with your client are trying to accomplish. And then you're going to make an active decision. Do I accomplish that outcome with lower cost index products through a portfolio construction methodology? Do I do that in combination with some active exposures? Do I have confidence based on experience and proven results that in a particular area of a market, there's a firm or a person that can and historically has outperformed? Those are decisions you need to make. And ultimately, you're making an active decision, right? I think what we're seeing a lot recently is that in more developed markets where the sort of efficient capital market hypothesis applies, the market reflects the inputs of everybody who's thinking about the relative value of a security in the current price of that security. That sort of low cost market exposure with exposure to alternative investment products in the private markets or otherwise, where you're looking at a much longer term horizon and there isn't the public exchange of information, is an alternative to the traditional sort of 60-40 stock bond split. And that often, like, there's a reason that there's a value in assessing an individual's situation, their needs, and then making an active decision through either index, systematic, or active products, how best to implement a portfolio and try to achieve those ends. Knowing we're not always going to be perfect.
And it doesn't have to be either or, it can be a combination. What I found interesting at this conference was that, as is the case with whenever there's a formal debate, is the moderator will take a show of hands poll who's predisposed to A and who's predisposed to B. And then the two sides slug it out for 45 minutes. And at the end, they take the poll all over again and to see if anyone has moved. And basically, no one really changed their opinion, even though strong points were made on both sides. But again, to your point of having a bias and a predisposition, people came into the discussion ostensibly with an open mind, but the fact of the matter is they had a viewpoint that they had going in, and that viewpoint did not change in spite of the fact that they had multiple opportunities in both directions to change that viewpoint. Biases are not only very real, they're also very sticky, and they're difficult to shed. If you believe fundamentally in your both nature and or nurture, and sometimes seeing new evidence is not the sort of thing that people want to hear. We all think that we're open to evidence and new ways of thinking of things and so forth, but in reality, not so much.
Confirmation bias is one of the most powerful, right? You can hear
Sure.
both sides, and the perspectives that reinforce the views you go in with are much more impactful than the ones that challenge them, right? And your brain is wired that way. It's not that you're dumb as compared to other people. Our brains are wired that way.
I'm glad that you named it because I didn't want to reference confirmation bias expressly because we have talked about it frequently on this podcast, but that's exactly what this is. And so that's a nice way of illustrating yet another variant of what confirmation bias is. Let's talk about technology. As people give advice, they have to find ways to help people to make better decisions. And sometimes there's a segment of the wealth management industry that says technology is a wonderful tool because it can help people to look at things that they otherwise might not look at, or at the very least, look at them in a different way. So, what are your thoughts about the role of technology in the financial services industry?
I guess, first of all, technology is embedded across the asset management, investment management business. I think that the technologies that we use to interface with our clients, they're the technologies we use to parse data instead of sitting down with management at every company, every quarter. We now have machine learning that's just extracting it real time and informing our decision making. I think that there was a time when currencies didn't exist, when almost every aspect of our current market structure didn't exist. And we have found ways to incorporate them in general for the better, to make our markets more efficient, to give all of us a better chance at good economic outcomes. Not always, they can be used for good or bad, but I'd say directionally they've been positive. I think technology is the same way. I think as an advisor, the ability to on a Zoom call with your client in Thunder Bay or wherever they might be is more powerful than a phone call. I think just saying it enables you to get a better sense of the state your client's in, and it's a powerful tool, I think. It enabled us to get through the COVID crisis. Like it gave us a way to stay in sort of verbal and visual contact with each other. So I think that's positive. I think the amount of data we have access to, the amount of information we have access to is, again, a net positive. I think there are aspects of it, though, that can be challenging. I think you talk about confirmation bias, and then you couple that with something like availability bias, and you find that if it's really easy for me to avoid news or things that challenge my existing views, I'm going to weigh them more powerfully, right? So the availability of information that validates my pre-existing views on things can be a negative. It makes those existing biases even more powerful and harder for you as an advisor to help your client overcome. But I would argue that whether it's artificial intelligence, social media, all of the ways we use technology are directionally beneficial. But again, only if we're able to step back and be aware of how we're using them. I think the risk is just that it makes it in some ways easier for us to avoid doing that and just to almost subconsciously move through our days
Like
sometimes.
anything else, the tool is only as good as the person using it, and you have to have you as you make the decision to use a tool, to use a technology, you have to do it with the idea of making better decisions as opposed to simply reinforcing the viewpoint that you had before you started using the tool and using it more the way the saying goes, it's the way a drunk uses a lamppost, more for support than for illumination. And you should be seeking illumination and not support so much. Okay, so I have one last question before we wrap this up, and that is with regard to macro trends. There have been a lot of things going on. The world is changing perhaps more quickly than ever. And you've been around the block a few times, as have I. So I'm not casting aspersions here. But what would you say are the major trends going on in 2025? And what do you think they portend for the future?
Sure. And so when you use the word trends consciously here, I think, because there's a lot going on that are potentially very short-term trends that I think capture most of the headlines, capture most of my attention on any given day. But again, you try to step back from that and look at what are they parts of, right? So I think it's undeniable that after decades of globalization, we're seeing a retrenchment there. I think things like tariff wars and shrinking of supply chains and things like that are part of that are headlines today. But I think the world economic order is changing. It's moving away from the sort of globalization that formed most of my years of sort of introduction to this industry, right? So I think we need to be aware of that. Demographics, huge. I think that being aware of the aging demographics in developed markets, what that means for different industries, being aware that we're
Mhm.
getting older and our reliance on sort of healthcare systems and the impact on the pharmaceutical industries and things like that is really important. I think that, and you raised it, right? Technology, and very specifically AI and social media, and how are they changing the way our economies work, the types of employment we should be thinking about both for ourselves and for our children going forward. Those are three huge trends that are not going to change regardless of who wins the next election. They're going to drive economic.
And that's what I was part of why I asked is because it gives me a chance to reference my book Bullshift again, because the optimism bias that a lot of people in the industry talk about, they will oftentimes gloss over the deglobalization. They will gloss over the changing demographics. And it's not all sunshine and rainbows. And that doesn't make people like me a pessimist, but I really want people to make decisions that are informed and realistic and not just pie in the sky with rose colored glasses. You need to look at the world as it is, not as you wish it to be or as it once was. And I think that's an important distinction. This has been a wonderful conversation, Warren. I always like to finish with this question, and that is this is a podcast called Make Better Wealth Decisions. If it were up to you, what advice would you give to listeners and viewers about helping them to make better wealth decisions?
Oh, again, thank you for having me, John. I think it's really simple. It's awareness. Just we can step back, pay attention to the decisions we're making and why we're making them. I think those decisions are going to get better and better the more aware we are of what's driving them.
Perfect. Thank you so much, Warren. All the best to you.
Thank you, John. Great talking to you.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.